average price is up more than 57,000 in February. Bank of Canada is already giving a signal that they might pause on the future interest rate hikes. More than 4,700 homes getting sold, but sales are down comparatively. On the other side, listings are also down. As of now, a lot of properties are going in multiple offers. In today's video, we are going to talk about job market stats for the month of February, your property tax bill, which is going to increase in the future months, and the most important thing, what are our prediction on the future interest rate hikes. Let's go in the numbers as of now. In the month of February, we had more than 4,700 homes getting sold, which are 47% down year-on-year basis when we were in the peak real estate market in the COVID times of last February, basically pre-COVID times. New listings are also down, so which is supporting the current increase in the prices, because the listings are down close to 41%, and the average price is hovering around 1.1 million. As of now, this is more comparatively to the month of January last month. But if you see year-on-year basis, it is 18% down. If you go dig deeper into the numbers, detached home prices are down close to 20%. Most dent is happened to the semi-detached, where we have 21% decrease in the prices. If you have bought a property in the month of February last year for $1 million of a semi-detached, now you have to pay 22% less to buy the same property. It's also because of 8 interest rate hikes that we have seen, because it's almost a 1 year. It was 2nd of March 2022 when we had the first interest rate hike happened. After that, Bank of Canada have done 8 hikes. And coming to the prices back again, townhomes saw 16% decline and condos have 11% decline as of now year-on-year basis. So but if you go into the numbers, we can see more than the average price is 1.1 million, the median price is 940. The same average price was 1,038,000 for when it was last 1 month. Important thing to note here is selling price to listing price ratio, it is 100%. This means the properties are selling on average where it's getting listed. Some of the properties are even getting multiple offers. If you see in particular York region, the sell to list price ratios is 1 or 2%. Same is happening in the Durham region. So this means a lot of activity is happening as we are entering into the spring market. And another number to talk about here is 57% of the sales that happened last month, it was under 1 million price point. This means a lot of first time home buyers are entering into the market, which were holding back from last 1 year. So that's a good sign. This might be a sign that we might be out of the bear market as of now. If you see the most number of sales happened, obviously it's a city of Toronto, which has more than 1,700 sales. Next to it is York region, 910 sales happening. Then we have Peel region, more than 800. If you talk about specifically in Peel, you can see Brampton had 382 homes sold, which is same as Mississauga, 383. I know you must be interested in the average prices. If you're looking to buy the homes in this area, the average price is around $1 million. Obviously in Mississauga, it is less than 900 because it have more condo units which are available for sales. If you're looking in Halton region, in Halton, obviously Burlington and Oakville have the similar number of sales happening, but there's a huge gap between the average prices. Burlington average price is 930, and then it's more than 1.3 million for a Oakville market. And if you are in York region, most number of sales happen in Markham, where the average price is more than 1.2 million. The most expensive area we always know in York is our favorite, that is King, which have more than the average price is more than 2 million. In fact, last time we had a question asked like which is the most expensive community in Mississauga. That was in our live event. I'm reiterating here that there are top 3 communities of Mississauga that are hot because they are very close to water. One is Lorney Park, Sheridan, and the Port Credit. Those are expensive communities if you're looking to buy in Mississauga. Another thing to note about is average days in market. They have softened a bit. It is 33 days. So if you're selling a property, you have it is taking around 33 days to sell that property in the market. So let's dig deeper on the numbers. If you're looking into the detached, obviously if you're planning to buy a detached home, so let's go in the February month. As the average price of a detached is close to even more than 1.4 million. This is throughout the Trab area, which is like if you see the most number of sales are happening in the detached is obviously we have Brampton close to 200 homes. with the average price of 1.2 million, and then we have Mississauga the average price is 1.5. So here you can see the difference between the Brampton and Mississauga prices. Obviously Mississauga is a bit premium compared to Brampton in the detached market sector, and another is Vaughan, which is more than 100 properties getting sold with the average price close to 1.9 million, more than 1.9 million. And if you are in Oakville, 100 homes getting sold with the average price again more than 1.9 million. So those are expensive communities to look into. Similarly, if you are looking into semi-detached prices, the average price is more than 1 million throughout Toronto real estate market, and the most number of sales of semis are happening obviously in Brampton. 72 semis getting sold with the average price of 915,000, followed by we have Mississauga 42 semis with the average price of 1,033,000. So if you're buying a semi, you can buy in Brampton under 1 million, but if you're buying in Mississauga, it will be obviously more than 1 million. That's average prices as of now. Another community which have most number of sales happening is obviously it's Toronto 45 in Toronto Central. Average price is more than 1.5 million. Yeah, crazy. It's expensive in Toronto to buying a semi-detached because you are in the core downtown area itself. Another thing to note about, if you moved out of semis, people are interested in townhomes. This is the very hot market for first-time home buyers because of its average prices close to $1 million, but there are communities where you can get townhomes less than 1 million. So in particular, if you talk about, let's say, Burlington, the average price is 900. If you talk about Oakville, obviously Oakville is a bit expensive. It's a premium city, is close to 1.2 million. But on the other side, Brampton, we have 51 towns getting sold. The average price is now 900,000. Similarly, Mississauga, it's more than 1 million. So these are the markets you need to figure it out based on your price range and the budget where you fit in, under 1 million or more than 1 million. If you're still the prices are lower side, maybe you can look into the Durham region where the average price is 871,000. The most I would say that it's typically around 700. That is Clearington, the 733. That's the price of a townhome. So it's based on that. Innisfil, obviously, if you're looking at Innisfil markets, close to 700. Asa, that's the communities nearby towns to that. In the Simcoe County, it's around 560,000. Another interesting sector to talk about for first-time home buyers is the condo townhomes, or you call it as apartments itself. So condo townhomes, the most number of sales, it's our heart always, it's Mississauga, close to 70 condo townhomes getting sold with the average price of 800,000, and the average price of condo townhome overall is 785,000. And if you can see, the average sales to list price ratios is more than 100%. So this means you are getting competition as a first-time home buyers in these type of properties where this is getting in multiple offers, and same is for the townhome also, that is 104%. So if you're listing a property for $1 million, it's going more 4% up in multiple offers for those smaller segments under 1 million. Let's go into those condo apartments itself. Obviously the average the top communities will be the downtown Toronto area, which is 952. The most number of condo apartments getting sold is 620 in the Toronto Central with the average price of 787,000. The average price overall in the market is 700,000. Here the selling to list price ratios is still 98%. So still you have some leverage available in the condo market. But if you see condo townhomes and the freehold townhomes, they are very hot. They are going in multiple offers. And let's see what is the average growth as of now, which we have seen in the market. So this is the overall area that we cover here in today's video, which is the Trab real estate market, which starts from Clearington till Burlington, and on the other side from Innisfil till the Toronto. Orangeville is also covered. And another thing to note is that's what I was talking about. 3,100 homes were getting sold in January. As we enter in the spring, obviously sales are prominent going to go up, but you can see there's an average price is also getting up. As the average price was 1,038,000, which is 1,095,000 with a 1 month itself. If somebody have sold their home last month, in month of January, they could have got 57,000 more in the month of February. Obviously this is based on the type of property you're selling, the location, there are so many other factors, but this is a sign of growth in the overall market to talk about. Now let's talk about what are the news happening on the interest rate. As of now, Bank of Canada, when they had an interest rate hike happening in the month of January, they announced in the future they might pause on the future interest rates hikes. There are two reasons why they are going for the pause. The first is GDP is already slowing down. Second thing is, as of now, the inflation is 5.9%, which have decelerated from the peak of June, which was 8.1%. So that's a good sign for the economy. Bank of Canada, as of now, when we are recording this video on 7th of March, tomorrow is 8th of March, the Bank of Canada is coming with the news, but our prediction is they might pause it, and it's also coming as per the communication from the Bank of Canada also. So it's a good sign for the people who have been struggling with the last 8 hikes that we have seen because of the housing affordability, because of the cash flow. And on the other side, it's going to boost the Canadian real estate market, which was almost at the pause time frame from last 1 year because of the so many interest rate hikes, and people were sitting on the sidelines and they were waiting when they can get a signal from the Bank of Canada, they can jump into the market. We have already seen that hike. We have already seen that interest happening in the month of February, because a lot of people, first-time homebuyers, who were waiting on the side and they jump into the market. So that's a good sign overall. But our prediction as of now is we might see the pause continue in the month of April also, and when the Bank of Canada is meeting again for the next rate evaluation in the month of June, they might start with the new agenda based on what is happening in the overall world economy as of now. Just to reiterate the numbers again, year on year we have sales down 47%, prices are down close to 18%, so the listings are down 40%, and the sales to list ratios is also 7% down, and days in the market is 200% up year on year basis. I know it was crazy hot in February last year where average days was only 11 days. The property comes to the market, it's getting sold in minutes. It is not happening as of now, but the chances are it might happen in the properties which are less than $1 million mark. Another thing to talk about is there are news coming up because of inflation. The city running cost, the overall city, the running cost is, the expenses are going up. Maybe it's because of snow removal, prices are up, because of inflations, because of food prices up, everything is going up, and the cost of labor is going up too. That's the reason. If you see in the news, you can see there's a 5.5% property tax hike that have been already approved for the Toronto area in particular, and Brampton. That the chances are, if the latest budget is getting approved, we might see another hike happening in the property tax. So it is an average $321 hike per household. So be mindful, interest rates are getting frozen up, but GDP is slowing down, but on the other side you have to pay more for your property per month. Same as a Mississauga, it's around close to 3%, and Oakville have already announced that there is a property tax hike happening more than 3%. So people, like I've seen the people in the Brampton from last 2-3 years, the property tax were frozen because of COVID or whatever city was in surplus, but as of now this will be huge dent on your monthly budget. So this is the overall gist from our side. Interest rates, obviously in the short-term future it's going to freeze, and the long term it depends on the economy. The chances are it will stabilize and then it'll start coming down by the year end. It's a good chance. And for the first-time home buyers, if you see the rental market is up 19% in the Toronto. This is based on the numbers we have. The average price in the last quarter of 2022 was for a one bedroom was $2,500 per month, which is 19% up year on year basis. So if you're paying heavy rentals, why not you jump into the market, and you already have the money available and you can afford it, you can afford those payments. This is the time when you can start. You have been waiting from 1 year. This is the time to jump into the market and grab the deals as of now. So this is the overall prediction from our side. Would love you to subscribe to our channel, because we produce continuous content like this where you educate, and also these days we are doing weekly live on our Instagram. Would love you to follow us on Instagram also, and bye bye from us till the next video. Thank you.